All right, so we had a very busy week in the markets. Bitcoin was the big shiner this week, but stocks did really, really well as well. First things first, if you get value out of the video, please like, subscribe, check out those links below. I very much appreciate all the support. So getting right into it here, let's start with Bitcoin. And even though stocks did really good this week, the S&P was up about 4.5%, the NASDAQ was up about 6.5%, Meg 7 was up almost 10%. Small caps, mid caps, and the value side definitely did trail, but they were still up about 3%. So virtually everywhere was up this week. And I think the near-term headwinds, I think we've seen and gone past those. But I still think a recession is a legitimate concern that people need to be concerned about. And when that news breaks, or when it's obvious that, and even the Fed and whatnot are acknowledging that, then I think we might test the lows again. But I think that the tariff threats, although it's definitely still there, I think that cooler heads will prevail. Now, again, it doesn't mean we've seen the end of it, but I do think cooler heads will prevail. But I still do think we're going to test the lows for stocks, and I think mainly it'll be due to recession, or at the very least recession fears, or maybe we get right back in the tariff issues. So that's basically what I think as far as the markets go. But it's nice to see a little bit of a snapback from what we've seen over the last month or so. So getting into Bitcoin here, Bitcoin, like I said, has officially outperformed all of the major indexes this year. It's up this was on Monday, but it's up around 95,000 US at the time of me making this video. And I've said time and time again that Bitcoin is where the smart money is at. So when I think a lot of people say, oh, Bitcoin just trades with the market. And the first thing you need to point out there is that, number one, Bitcoin's up like 1,000% over the last 5 years. Even the NASDAQ's only up like 100%, maybe a little over 100%. So the idea that it's trading at par with the market is just stupid. Yeah, they've both happened to go up and they've both happened to go down over the short term. But comparing an asset that's up 10x to an asset that's up, 50% is kind of laughable in my opinion. But I think the other thing too is that I think the reason that Bitcoin is trading with the market recently is the smart money is slowly starting to get into Bitcoin. So I don't think we ever see complete decoupling. But the reason for that, I think, is that eventually, and I think we're close to being there, is the smart money is going to be in Bitcoin. So when bad news comes for stocks, well, Bitcoin trades 24/7, so yeah, it's going to sell off. And when good news comes, well, yeah, Bitcoin trades 24/7, so you're going to get good news. So I think that's the main reason this is happening, but this is the beginning of kind of a decoupling. But the reason that it won't completely decouple is because the smart money is in Bitcoin. Michael Saylor, banks are now free to begin supporting Bitcoin. So the Fed and the SEC, et cetera, are slowly reducing their restrictions on crypto and mainly Bitcoin. And this is just another reason that you should be bullish. Again, do your own research. I could be wrong, but I think that the writing is on the wall. Like the writing is like, look at BlackRock, right? The fact that BlackRock keeps doubling down. Like, you really think that the largest asset manager in the world is doubling down on Bitcoin, and you think it's going away? Like, what planet do you live on? They're offering ETFs in Europe. Like, they're just continuing to double down. Obviously, the largest asset manager in the world doing something is important. There was another story this week I seen on the Pelosi tracker that there's one of the people on the Financial Services Committee, or one of those kind of committees. They recently disclosed they bought another 250,000 of one of the Bitcoin ETFs. So a big concern with Bitcoin, kind of getting off track here a little bit, but a big concern with Bitcoin is I think part of the reason why it sold off also is there's people that think that this bull run is over. And I don't think that that's the case. Number one, because Usually it's later in that odd number year, being this year, that Bitcoin tops. Like it was late 2017 that it topped the last time. It was late 2021. So that would imply that it tops later in 2025. But I think that it's different this time, and that we have massive institutional adoption. I mean, between MicroStrategy, between all of these publicly and private companies, like, they've literally acquired probably pushing 1 million Bitcoin over the last 5 years. And the ETFs have acquired 500,000, 1 million Bitcoin. Like, that is huge. Like, that is absolutely huge. And the importance of that cannot be overstated. So I think that's really, really important as well. So the last thing I wanted to bring up here as well is Jack Mallers, CEO of 21 Capital, a new firm focused on acquiring Bitcoin by Tether and SoftBank. The firm plans to go public through a SPAC that will launch with over 42,000 Bitcoin in its treasury. So again, we've seen MicroStrategies leading the way. We've seen Kohler. We've seen Semler Scientific, obviously Marathon, Riot, Hut 8 Mine, like Hive. The list goes on and on of companies that own Bitcoin. And I think that this is only going to continue. Like, this really is only going to continue because the writing's on the wall. It's obvious that what MicroStrategy is doing is successful. And there wouldn't be companies like this. Like, this is just a random company coming out of the blue buying 42,000 Bitcoin. Like, that's crazy. That's more than virtually every other company in the world. Like, you probably can count on one hand the amount of companies that have more Bitcoin than that. And this is a new company that's going to go public that'll have that much Bitcoin day one. Like, I don't think people realize just how important this is and how big this is. So this is something that really needs to be kept an eye on. And the last thing I'll leave it on here is, I know I kind of briefly mentioned it, but a lot of people are bummed out on the price of Bitcoin, and I'm really not. Because I don't care about making money. Like, if you're a short-term gambler, like one of those kind of people, like, it's not for you. Stocks aren't for you. Like, investing isn't for you. Like, go to the casino, go bet on sports. Like, that's what you should be doing. If you're a long-term person, Bitcoin's for you. So I don't care what the price is. Like, with any asset, you should be okay with buying in and not knowing the price for 5 or 10 years. If you're not okay with that, then you probably shouldn't be buying. So that's the last thing. I'll leave it on here. I want to transition to the earnings news from this past week. We had a very busy earnings week. Starting with Google. Google released very, very good earnings. They easily beat earnings this week. They also easily beat revenue. They announced a large share buyback program. They're increasing their dividend. They were up quite significantly on that news. They're up, looks like about 10% or so on the week. Yeah, about just over 9%. So good news if you're a Google shareholder. I'm not a Google. I mean, I do own a good sized position in the NASDAQ. I do own a small position in the S&P ETFs as well. So I'm indirectly exposed to Google, but I don't directly have shares. I'm a little bit concerned about them, mainly because they're mainly an advertising business, and if we do, I mean, we're seeing a slowing economy. That's obvious. And in a slowing economy, one of the first things that companies do is they cut back on advertising. So I think that'll hurt Google, but long term, I'm still fairly bullish on them. I don't think I ever would buy them, but the main reason for that is that if you have a large position in market cap weighted, either the NASDAQ or the SPY, VOO, if you hold large positions in those companies, I don't think I would invest directly in a top 5 to 10 company, because you already have a good size position in them through these ETFs. The other big one from this past week was Tesla. Tesla released pretty bad earnings. They missed earnings. They did also miss revenue. And I think that, I mean, I've said time and time again that the car business just isn't a good investment. They were actually up quite significantly on the week, but I think that was due to reasons other than their earnings. But I'm not a big fan of the car business. I mean, when you look at these companies, like, it's just not a good business, at least as far as publicly traded companies go. It's extremely competitive. Margins just aren't great, and no one company has a moat. Like, no one has ever thought of a car company and thought to themselves, like, they have a really good moat. So that's why I'm just not a fan of car companies. And I know a lot of people are going to say, but myself driving, but all that kind of, the AI stuff. I still don't buy it. Again, same thing. There's nothing stopping a different company from doing that as well. MedPace Holdings. This is one I sold off recently, actually. They did beat earnings and revenue. I still think they're a solid company, but like I said, I did sell it off recently. Not because I think it's a bad company, just because I think there's better options out there. For me, I've always thought to myself that when I'm investing directly in a company, I want to think, hey, is it a top 50 or 100 company in the world? If it's not, I don't think it's worth investing. 3M, this is one I don't think I ever would invest in, but it's a popular company that a lot of people follow. They beat earnings, they missed revenue, they're actually up nicely on that news. Lockheed Martin, another one that I don't think I ever would buy, but it's a good one to watch, just kind of interesting. Beat earnings and revenue, they were up nicely on the week. Moody's, this is one I talked about recently. I very much do like this company. They beat earnings and revenue. This is a very, very good company. I really do like it. They're just too expensive. They were up on the week. The next one, also similar story here. MSCI, also very much like MSCI. I think they're a very good company as well. Beat earnings and revenue. They were also up on, actually it looks like they were down slightly on the week. So I still think they're too expensive though where they're at. Pulte Home, this is one that I sold off recently. I think with a weakening economy, I don't think house builders are the way to go. I think that if you have a really good economy, or you have a rate lowering environment, that's probably when I would get in. But I do think this is one of the best, if not the best, of the home builders. Verizon, this is another popular dividend stock. I don't like it. I just think there's way better options. They did beat earnings, so good news there, but it looks like they were down on the week, actually, so that's kind of interesting. Chubb, this is one of the companies that Warren Buffett bought, I think it was maybe a year ago or so. They were down on the week. They did beat earnings and revenue, though. I would buy them. I just think they're too expensive where they're at right now. Honestly, ever since Warren Buffett bought them, I think they're too expensive, so I would need to see a pullback here. EWBC, this is one of the better, maybe one of the best regional banks, in my opinion. I used to have a position. I sold them. I bought them recently. I bought them back in like 2023, during that banking crisis where they sold off quite significantly, and I sold them recently because I just think they're too expensive. They beat earnings and revenue. I would buy them again if they got cheap enough. Intuitive Surgical, ISRG, they beat earnings and revenue. This is a really good company. I like them. I just think they're too expensive where they're at right now. I would buy them if they got cheap enough for sure. I just think they're too expensive. Amphenol, this is actually one of the larger positions, probably a top 5 to 10 position in my personal portfolio. They beat earnings and revenue. They were actually up very significantly on that news. I might add a little bit more if they got cheap enough, but I just think they haven't been cheap enough in probably a couple years, which is, I think, roughly when I bought them. Next one here is AT&T. This is another popular one that I think it's just a dividend trap. I don't think I ever would buy it. Missed earnings, they beat revenue. They were basically flat on the week. LII, this is one I have on a watch list. I don't know if I would pull the trigger. I would have to wait and see if they ever got cheap enough. I just think they're way too expensive where they're at right now. They beat earnings and revenue. Another one, this is one I'm dollar cost averaging here. ODFL, I really do like this company. I think that they're definitely at a price where I do think you can be buying them. Their earnings and revenue were basically in line with expectations. I think they're selling off because in a weakening economy, a company like this is going to be less in demand. But long term, I still think they're going to be okay. BPOP. This is probably the only other of the regional banks that I like. Also one that I bought back in the spring of 2023 that I sold off. I really do like them. I would buy them again if it got cheap enough. I just think they're too expensive where they're at right now. Chipotle is another one. This is one I have on a watch list. I don't know if I ever would pull the trigger, but if it got cheap enough, I'm sure I would. It's just a matter of if that ever happens. They did beat earnings and revenue there. kind of an interesting company as well. They've kind of, honestly, fast food companies, most of them, they're really not worth buying, but this is one I think that's done, I guess they're kind of fast casual, a lot of people might say, but they're not actually in Canada, so I've never actually ate there, but certainly a company that I think is definitely worth, at the very least, having on a watch list. CSL, this is one that I am also dollar cost averaging right now. I really do like this company. Beat earnings and revenue, a very good company in my opinion. I'm definitely buying them right now. EPRT, this is one of the few REITs that I'm buying right now. I very much do like them. They're kind of a boring business, but I think they're a really good company, so that's why I'm buying them right now. They did slightly miss earnings. They beat revenue. They were actually kind of down on the week. Next one here is Lam Research. I do have a very good size position in this company. I really do like them. I don't think I ever would buy them, but that's mainly because I already have a full position and I plan on just reinvesting dividends long term. ServiceNow. This is also another one that's way too expensive. I really do like them. They're just way too expensive. I would buy them if it got cheap enough because I think they're a really good company, but I just think they're way too expensive where they're at right now. The next one is ALLE. This is another one that I have on a watch list. I don't know if I ever would buy them. Maybe there's better options, but I do think they're a solid company. I don't know if they're quite good enough to where I would buy them though. But again, if it got cheap enough, I probably would. They did beat earnings and revenue. They were up quite nicely on the week. Pepsi is the next one on the list here. They beat revenue, they missed earnings, and they lowered guidance, and that's why I think they were down quite a bit on the week. This is one that currently has an 8% dividend according to Stock Unlock here, which I don't know if that makes sense, because, I mean, maybe they just paid a one-time large dividend here. I'm not actually sure what's going on there. I actually just noticed that. That's something that would require more time than I have here today. I don't want to make this a 45-minute video, so I'm going to leave it there. But I'm not actually sure. But, I mean, their payout ratio is like 150%, so there's no way that's correct. There's got to be something else going on there. Like I said, they lowered guidance, and that's a little bit concerning. Another example of a company that lowered guidance here is Procter & Gamble, if I can get them to load here. Procter & Gamble, they actually beat earnings, but like I said, they lowered guidance, and that caused them to be down quite a bit on the week. Whenever you see some of these kind of consumer staples or some of these more boring companies lowering guidance, that definitely is a little bit concerning to me. So something, again, like I said, I think recession is definitely a legitimate concern here, and that probably will cause the markets to sell off. And it could happen anytime, so definitely a concern here. Hartford Insurance, like I said, this is one of my favorite companies to be buying right now. They beat earnings and revenue. They actually raised guidance, I believe, and they were actually up only slightly on the week, but I definitely do like them. And the last one here is KNSL. Beat earnings. They actually slightly missed revenue, and they were actually down quite a bit on that news. They were actually down about 15% on that news. I believe they lowered guidance a little bit. I'm not concerned, mainly because I'm dollar cost averaging this company. I still think they're growing fine, and honestly, I think that they're actually getting to the point to where I think they're bordering on being cheap. I don't know if I would say that yet, but if they sold off another 5 to 10%, I definitely think they're cheap, because this company is still growing very very fast, very well, and they're in a really good industry. So I'm not concerned long term. Obviously, short term, I'm definitely concerned about the market and a lot of stocks. But again, I'm not a short term investor. I don't care if the market sells off 10 or 20%. The only thing that should be on your mind is, am I invested in good companies? Because if you're invested in good companies at a fair price, yeah, they could sell off in the short term, but all you're concerned about is the long term, because the long term is the only thing that matters. So anyway, that's what I wanted to bring up today. If you got value out of the video, like I said, please like, subscribe, comment, and stay tuned for more.